Welcome to this lesson on shooting star. So basically, what is a shooting star? Now it looks something like this, similar to inverted hammer. You have a wick that is 2 times longer than the length of the body, and you have a long upper wick and then a small body at the bottom. So the whole entire psychology is that initially the buyers come in, push all the price all the way up here. Sellers at the end of the session start to come in, dominate the tug of war, and then push the price all the way down, and then the price close right here. So in the end of the session, the sellers won the game. So when you see a shooting star at the end of an uptrend, it tells you that price is going to reverse from an uptrend to a downtrend, okay? Or it's just going to cause a temporary downward retracement. So this means that the bullish trend is going to end, or it just means that there's going to be a temporary retracement in an uptrend, okay? Because in an uptrend, you can see retracement downwards, it goes up, and then retracement downwards. And the color of the body is irrelevant. Now, because this is a bearish signal, so ideally you want it to be red color, but even if it's green color, it's still okay. And it increases in significance if it tests key levels, okay? So the color of the body is not that important because the context is more important. If you see a perfect shooting star, but if it occurs at a random place, then it's not going to be significant, okay? So if I'm to ask you right now, which one is stronger, the first one or the second one? Definitely the second one, because you have a longer upper wick. Now, long and short is relative, so you need to look at the size of the candle in the previous sessions. If the candles are relatively short and then this one is really long, okay, then this would have a very strong bearish implication. Now the thing is, like I said, context is really important. So you can see a shooting star over here, and you see a strong upper wick, okay, that pierces through this resistance line. And the thing is, when it comes to shooting star, you need a confirmation. Look at the second candle that forms. It is a bearish candle, and hence this is a confirmation that the price is going to continue to go down, okay? And this just shows that buyers initially, they were coming in, push the price up, then sellers start to come in, they won the game, and then sellers start to push the price down, and then supply increases, and hence this will cause a retracement or the end of the uptrend, okay? Now particularly shooting star is very significant if you see it at the end of the trend, and also when you see it has a major resistance. That's why I say the color is not that important, even though this green color doesn't really matter, okay? And some more, you see a very long tail over here, so this tells you that the bearish implication is pretty strong, because if you compare the size of it to the previous candles, which is really small, you know that the sellers are strong in their game right here, okay? Now the thing is, aside from looking for confirmation, okay, and also looking for resistance levels, when you see a major bullish move right at the end of the trend in particular, it can cause either a retracement or temporary end of the trend. So it also helps to look at what happens before shooting star. But if the price goes up steadily, it's still fine as long as it tests a key resistance level, just like this one over here, okay? And you add that with confirmation from the momentum indicators, okay? And if you are to enter a trade picking tops and bottoms, okay, you can put your stop loss just above the shooting star, okay? If you're more aggressive, then you enter right after shooting star. In this case, it's okay because it is testing a very strong resistance, which tests 1 time, 2 times, 3 times, and a 4th time over here. But if you're more conservative, then you can wait for confirmation, which is over here. Then you can take a profit at the recent support, at a very strong support, which is somewhere over here, and you can add that with confirmation indicators. Now RSI is a momentum indicator that doesn't give you a lot of signals, but if you use CCI stochastics, it might go up to this overbought level, which gives you further confirmation, okay? So it's also suitable to be used in range trading. So you can see a shooting star over here, also form at the resistance. Okay, and in this case, price retraced to this level, which form a support. A resistance became a support. And one way you can use stochastics is if it is sloping down, okay, you often see price also going down. And when you see stochastics sloping up, you also see price going up. So you can see that shooting star work pretty well when it is formed at the resistance level. And moreover, you can see what happened before the shooting star. It is a big bullish candle. Okay, and the thing is, a lot of people confuse shooting star with inverted hammer because it looks the same. You don't really need to memorize all the names because you just need to understand the psychology behind it. So for example, you see shooting star over here with long upper wick and then small body at the bottom. It is formed in a resistance, okay, resistance zone, and hence the price bounce off from here, especially when you see a confirmation red candle after that. But then you see the same pattern, almost the same pattern happening right down here. And instead of the price going down, it continues to go up. Why is that? Because it is formed at a support level. And the thing is, if you study the psychology of inverted hammer, because there's an upper wick to begin with, it means that buyers had the ability to push the price all the way up. Even though at the end of the session, sellers still won, but then the fact that buyers were present during the session, it gives you a clue that buyers would start to come in later on, especially when after that signal, a bullish candle is formed. So you can see there's another candle that gives you an upper wick and also bullish candles after that. And also you know that price is going to retrace from here due to the fact that stochastics gave you overbought signal, and over here stochastics went from overbought back to neutral level. And moreover, stochastic is sloping upwards. Okay, you already have the idea that the price is going to bounce off from there, and your percentage K is above percentage D in this case. So the thing is, context is really important, because if shooting star or inverted hammer appear at a really random place, a very random place, it's not testing any support resistance, then it is just a candlestick that you should ignore. Okay, don't just see shooting star and then you enter. Like for example, if there's a shooting star over here, okay, then followed by a bearish candlestick, are you going to enter a sell trade? It is not testing any resistance, not testing any support. There's no clue as to the price is going to bounce off from there, aside from the fact that, okay, maybe stochastics gave you overbought, but did it go back to neutral level? No. So this is what I mean by a very random place to trade shooting star. And in this case, you see an inverted hammer over here. Okay, now you can tell that this is a support, okay, based on the previous points. And in this case, it became an inverted hammer rather than shooting star. So the price would bounce off from there, and also it is testing the 200 SMA, and then stochastics also went to oversold. This is a better point to trade as compared to here, okay, where you have no clue where the price is going to go. Context is really important, okay? So what I'm doing here is just helping you to spot the false signals. For example, you see one over here, okay? Is it testing a very important support level? Probably you can say, based on this resistance, it is testing this support. But then if you look at stochastics, is it giving you any signals? Not really. And some of the next candle that is formed is a green candle. Okay. And the thing is, sometimes shooting star, it can just tell you that the price is going to continue to range, especially when it is not formed at a very key critical level. And some more price has already bounced off from here, and right now it is not testing any levels. But as compared to this one right here, the next candle that you see is a bearish candlestick pattern. Okay, so this has more of a bearish implication as compared to the previous one. Now just understand one thing, the best trading signal for shooting star is when everything is aligned. For example, when it tests the trend line, when it tests the moving average, which gives it a confluence, and also when there's a divergence. Okay, basically you need to put all of these things together, make sure that all of these things are telling you the same message, and then you make an entry from there. And buyers were trying to push the price all the way up above resistance, but then it failed, so that's why there's a long wick. This gives you a very clear signal that sellers is going to win eventually. The next candle that's formed is a bearish candlestick pattern. RSI is giving you overbought signal, and when it breaks the major trend line, okay, it is a confirmation that the trend has ended. In this case, the trend line breakout gave you an earlier signal as compared to moving average. Okay, so it's very important for you to combine everything that you have learned and then apply it the right way. Okay, context is the most important thing. Okay, so with that, I'll talk to you in the next lesson. Bye.